Hey guys, what to trade next week? In this video we'll discuss gold after NFP. I will share with you my forecast for WTI crude oil. We will discuss dollar, Swiss, and we will analyze pound yen pair and EURCAD. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Let's start our analysis with the EURCAD pair. We are in a daily time frame, and analyzing the market trend, we can spot that since the beginning of May, the pair was trading in a bearish trend, and you can see that the market was setting the lower lows and lower highs. However, once the market reached that low in June, something started to change. You can see that here is our last low. And from that low, we saw a very nice pullback and the price set lower high right here. Then, however, when the next bearish movement initiated, the price didn't manage to retest that low, and instead the market set higher low. Then again the equal low and the higher low. Here it is the classic example of the bullish accumulation. It is the classic example of a very bullish pattern where we have a strong horizontal resistance and the sequence of the higher lows. And when you spot such a formation, it is the trigger for you that the bullish reversal is coming. And the confirmation that you should look for is the breakout of the resistance of the pattern to the upside. And you can see that this week, on Thursday, the market formed a high momentum bullish candle. And with that candle, the market successfully violated that resistance. The market closed above that on a daily. And now, of course, the broken structure turned into a very strong support from where we will expect a bullish continuation. Looking for the target, we can spot that here on the left we have a strong horizontal structure resistance. That daily resistance will be the next goal for the buyers, and I will expect a bullish continuation. And traders, if you didn't buy the retest of a broken structure, wait for one more occasional retest. That is the structure for you to watch, and that will be the safe zone for you to buy from. Hey guys, for more education, for more tips, subscribe to my Instagram. It is called Vasily Trader. The link in the description below. Subscribe now and let's continue. The next instrument that we'll discuss is pound yen pair. We are in a daily time frame, and of course you can see that the market is very bullish. We are trading in a strong bullish trend, and of course traders, you realize the fact that the market is very overbought at the moment, and definitely everyone is waiting for the correctional movement. Everyone is waiting at least for a pullback. And here on a daily time frame, analyzing the recent price action, we can definitely spot the signs of the weakness of the buyers. Because if we analyze the candlesticks, we can spot that that bullish candle was formed at the end of June. And if we analyze its range, we can spot that currently the pair is trading within the range of that candle. So here, traders, we have a perfect example of the inside bar formation. Classic indecision pattern, classic consolidation pattern. And of course, when the market is trading within the inside bar, when the market forms the inside bar, it signifies that the market participants found the equilibrium. And everything will change once the price violates the boundaries of the so-called mother's bar, of the first candle in that formation. And traders, if the daily candle closes below the lower boundary of the range of the mother's bar, it will be a very strong bearish signal, and it will most likely initiate the correctional movement on the pair. Our closest strong support and focus will be that structure. So if you're looking for the pullback trade on pound yen, definitely consider the breakout of the lower boundary of the mother's bar and the daily candle close below. Alternatively, of course, the market can easily respect that support, bounce from that, and violate the upper boundary of the modest bar. It's bullish breakout, the daily candle close above that will be a very strong bullish signal. And of course, that will lead to a bullish continuation. Time to discuss dollar-Swiss pair. Again, we are in a daily. And I guess you saw that on Friday we got the NFP day, and on Friday the pair dropped sharply, forming a high momentum bearish candle. And the fact is that analyzing the trend lines, we can spot that the pair violated a very important rising trend line. Moreover, we also got right here a very important horizontal support that was also broken. So here in dollar-Swiss pair we got a double breakout, the breakout of the horizontal support and the vertical support. It is a very important bearish signal, and of course it signifies that bears are dominating, and you can see that we are trading in a minor bearish trend since the end of May. So that violation is the indication that the bearish trend will continue. And our next goal for the sellers so far will be that horizontal structure support. That will be the next goal for the sellers, and that structure will most likely be reached quite soon. For entries, however, you should consider the area based on the broken trend line and the broken horizontal structure. That will be the so-called supply zone, the zone that unites the broken trend line and broken horizontal support. And that will be the area from where it will be safe for you to short. That will be the area where the selling orders are accumulating. So from there, look for shorting, expecting a bearish movement to that horizontal support. WTI crude oil daily time frame, and analyzing this one, we can spot that oil is in a consolidation. We can spot that for a very long period of time the market is trading in sideways. Also analyzing the recent price action, we can spot right here one more very peculiar resistance. So here on WTI crude oil we have a very rare pattern. We have the range, and within that range we have one more range. Yes, and that is the signal of a deep consolidation. However, analyzing the price action on Friday, we can spot that following the NFP data, the market successfully violated the resistance of the smaller range. The breakout is now confirmed, and of course the broken structure turned into a very strong support now. And of course, that is the signal that oil will keep growing. And so far, our goal for the buyers traders will be our next strong resistance. And technically speaking, our exact resistance traders will be over here, around 74.7 level. So that will be the next goal for the buyers. And that level right here will most likely be reached. So for entries, of course, consider the retest of the broken structure. That will be the safe zone to buy from, and from there you can expect a bullish movement to that resistance. Gold daily time frame. And first of all, let me remind you traders that recently gold reached a very important horizontal zone of demand, the zone that we spotted together, the zone that was nicely respected, and the zone from where we saw a very strong rejection at the end of June. And even though the market is still trading in a bearish trend, I see right here a very important bullish clue. If we zoom in the chart and analyze the price action, take a look what we have right here. We got a strong bearish impulse. We reached that level, we retraced, we set a little high, and then we dropped lower. Then we bounced, we set higher level, and we bounced again. Here, traders, we have a perfect example of a completed inverted head and shoulders pattern. Yes, do you see the pattern right here? How cute that pattern is. And that pattern is already completed, meaning that bears are in weakness now, and meaning that bulls are preparing for a bullish movement. And of course, the main trigger, the most important trigger that you should look for next week is of course the bullish breakout of the neckline of the pattern. Remember, on Wednesday, it is the inflation data. It is a very important news event for gold, and the bullish breakout of that neckline will be your best confirmation of the confirmed bullish reversal. So strictly wait for a daily candle close above the neckline, and once the daily candle closes above the broken neckline, immediately will turn into very strong support for you, and from there you can expect a bullish continuation, a bullish movement, at least to that resistance. So main focus now is that head and shoulders pattern. Remember, traders, that for now the reversal is not confirmed. For now we are still bearish. However, we are already preparing. The market already leaves the bullish close, so we are preparing for the reversal. And the daily candle close above the neckline will be your confirmation. The main focus of next week will be the US inflation data coming on Wednesday. So pay close attention to this news, traders, because it will definitely affect all dollar related instruments. Traders, if you have any questions, please feel free to ask in the comment section. I always reply. Also, traders, don't forget to subscribe to my Instagram, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.